It's a range-bound day for the indices on D Street. Auto and FMCG stocks remain weak while defensives like technology and consumer durables lead.
Reliance Industries reports a 20% jump in its bottom line for the second quarter as gross refining margins swell to $9.50 a barrel. Mukesh Ambani's big bet on shale gas pays off as revenue contribution from US assets triples to around $200 million. The stock, however, trades flat today.
Karnataka Bank fares early gains after the management refutes a report of a likely stake sale to ICICI Bank. MD and CEO Jairam Abhat tells ET Now that the company might raise funds through Tier 2 bonds this fiscal.
I think there's a bit of a statistical problem. I believe that the growth rate is around 5.5%, and I don't believe that for the year as a whole 4.9 is reasonable.
Montek Singh Ahluwalia of the Planning Commission reiterates that FY13 GDP likely to grow at 5.5% and rubbishes the IMF estimate of under 5% growth.
European markets open higher after reports suggest that Spain is ready to request for a rescue bailout and Portugal revealed an austerity-focused budget. This is Markets at Lunch. You're with ET Now.
Plenty of big fundamental voices joining us on the show this afternoon. Rajat Rajgaria of Motilal Oswal with an eye on earnings and sectors that are likely to surprise the market. Kenneth Andrade, CIO of IDFC Mutual Fund, also talks about fundamental cues that the market is going to be closely watching. Also on the show, Street View at Lunch, we'll be talking stocks with Hemang Jani of Sharekh Khan. Do a check on global equities with Josh Raymond of City Index. Plenty of technical calls as always coming in from our two top technical experts, Ashni Gujral and CK Narayan. Commodity trading ideas we'll get you from Unicorn Investment Solutions. And on the MF Corner, we'll discuss MNC funds with Virendra Kumar.
Okay, quickly want to walk you through what is happening in trade today. And we're lying quiet. It's been choppy but in a very narrow band. Fortunately, with an upward bias, and we have made those dashes at that 5,700 mark in trade. What's holding up? Very quickly then, we'll walk you through the gainers in trade. And you've got good gains coming in for Axis Bank post its earnings yesterday. A 4% bump up coming in for that one. Let's also get your status check on what Reliance Industries is up to on... well, the trading day after its earnings and an inline set at that. So Reliance Industries will just come up for you on your screens. The gainers include the likes of Aken, Bharti, Maruti, JP Associates and HDFC and Ranbaxy, the other ones which are looking good. Reliance, meantime, after having started off okay, it softened its trade at 820 thereabouts.
Okay, let's get your fundamental view to kick off the show. Rajat Rajkaria, Director of Research at Motilal Oswal Securities, puts the spotlight on the USL stock, says that once the Diageo deal is completed and there's clarity on management and shareholding changes, United Spirits will see some consolidation. He's also bullish on names such as JSW Energy and JP Infra.
If and when the deal gets consumed, depending upon what structure the company sees in terms of management change or shareholding change, it will start drawing new set of investors. This business has always been very, very attractive business for long-only investors to stay put in. And once they get the clarity post this deal on how the operations are going to be run and what is going to be the management structure, I think you will see new set of investors looking at this stock. The kind of profit swing that one can see in case of JSW Energy, we saw June quarter which itself has some evidence, and September should even be better. JP Infra, I think now once the asset has been laid out, and in our interactions with people in both UP and around, does indicate that we are going to see significant real estate activity in and around Noida. This company has huge parcels of land bank around that. If you look at the stock today at the current price of 50-55, that's what it's been trading at. The option value that you get to play out of this is very, very meaningful. I think we would be underweight consumer, we are underweight technology, we are almost market weight pharma, but yes, we are more biased towards financials, towards some of the quality infra names, and we would look to buy cement and dips. MCX is a new addition that we did last quarter. We have names like JP Infra, we have added names like Hexaware. I think each one of them are bottom-up stories.
Okay, let's also bring in Ashwini Gujral, fund manager at ashwinigujral.com to chat about the technicals of the market. Ashwini, another sideways session, at least it's turning out to be one. What's your call in the market?
Well, the call remains that the market is consolidating and it continues to remain in this 100-point band. Today we are doing a 20-point range on the Nifty, 60 points on the Bank Nifty, which is extremely low. So slowly, the market is getting compressed and probably getting ready for the next move. And 2 weeks are over in this consolidation. I think 24th of September we made the last high. So it's been a 3-week consolidation, and finally market should take some direction. Clearly we have the boundaries fixed now, 56.30, 57.30. For the moment it looks like the breakout should be on the upside, but we'll have to wait and watch.
What about the Bank Nifty? Because that as well has completely flattened out in trade, and that's something that has taken place in just the last few minutes or so. It's being replicated by the Nifty as well, which has gone completely flat now.
Well, if the total range is 60 points, I mean, you can't say that it was earlier very gung-ho and now it's flattened out. It was hardly 40-50 points up, and now it's 10 points up. So I don't think much should be made out. Bank Nifty is basically between 10,300 to about 10,550, 11,300 to about 11,550, and only once we get past 11,550 will you get a decisive move coming in. I think a lot depends on whether we see follow through on yesterday's US rally, and if that happens, chances are that it should be picked up by other Asian markets as well. Till then we are sideways, and no harm with that because you have enough individual stocks which are moving higher.
Okay, Ashwini, we'll talk a lot about those individual stocks a little later on the show, but put the spotlight on the heavyweight, Reliance Industries, a day after it reported earnings. The stock is trading flat, even though the GRM figure was a bit of a surprise for the market. Let's bring in our research analyst, Ajay Sharma, who's been tracking that company very closely. Ajay, how's the street feeding into RIL's numbers?
Well, Sandeep, the numbers were in line with estimates. There were a couple of areas where there was a pleasant surprise, especially on the GRM front. $9.50 a barrel. Most of the analysts have seen it in good light, seeing that the refining, which is the core business of the company, is on an improvement cycle. There was also a pleasant surprise on the shale gas investments also. Till now they've only invested, but now the EBITDA has actually posted a reasonable number of $198 million. That was being seen as a good thing. Also the other income stood quite healthy at 2,100 crore. Petchem remained as a concern, but most of the analysts, CLSA for example, has come out and said that they expect that the valuation will only increase from here on. Right now the valuations are trading at historic averages only. It has not seen much of an improvement, but now the core business is driving growth, and they've also announced investments in their core business of refining. So they have a buy call on that. But net, the stock opened about 11 rupees in the green after a healthy set of numbers and then flattened out. So news flow on the E&P side is something which will be driving the stock price from here on, according to CLSA.
My own take is that I think Reliance could produce an EBITDA of about close to $1 billion from the shale gas business alone, which would probably, I think, far more compensate even the loss of production in KG-D6, which the company is right now struggling with. $9 per barrel, I think, would be probably, I think, a base margin which Reliance would enjoy in this quarter. At the same time, refining margins in this quarter, last quarter that we have seen, they have already stabilized at around 4.2% vis-a-vis, I think, the last year of 4.5%. So to a greater extent, I think the company has come on track as far as refining business. Overall, I think the result has been quite satisfactory. I would say that I think going forward, one could possibly see higher amount of upside into the stock prices.
Going forward, if I just talk about the near term, then next quarter I expect the pain on the GRM should come. Primarily around 3.7 million barrel per day of the global refining capacity will come online. Primarily they have gone for the maintenance, seasonal maintenance, so that's why that's the key, I mean, pain I see in the near term. Stock can trade in something band, might be go at least 750, might be on the upside, it can go up to 850 or 870, but not much upside I expect at this level, until and unless company can manage the more than $10 GRM sustainably for next 2 quarters, or they will get the approval for higher kg gas prices around $8 to $10, which means they can able to many discoveries become viable and they can able to book the more reserves in the offshore east coast.
This has again become a pure cyclical company from a numbers point of view, and whichever quarter you will see good refining margins, the stock will trade accordingly. Besides that, I don't think there is any other trigger for the stock.
Okay, that's the view coming in on the market as well as Reliance. And here's a word coming in from Mr. P. Jairam Bhatt, MD at Karnataka Bank, who has categorically denied rumors for stake sale in the bank, stating that the bank is adequately capitalized for now and is in no immediate need of fresh capital. Here's an exclusive word coming in from Mr. Bhatt.
These rumors are all false. We are not interested in that, nor anybody has approached us. And we are adequately capitalized. In fact, about 1.5 years back, we came for the right issue. That right issue was oversubscribed. First quarter, the results were good. We had shown a growth of around 60% in the profit. So naturally, the share prices are in the increasing trend. And this being the case, I can't help any rumors, but once again I am reiterating, these are all very false.
Okay, another stock in focus is Maruti Suzuki. The stock is up a good 1.8% in trade. Remember, they've launched the new Alto 800 today. It potentially could be a big game changer for the company that's seen sales slow down significantly. Let's then take it across to Mayank Parikh of Maruti Suzuki, who's an exclusive chat with ET Now's Sumit Chaturvedi.
We're joined here by Mr. Mayank Parikh, CEO of Maruti Suzuki. Company has launched new Alto after 12 years. So we would like to know what are the changes in brief and also how much money you've spent in these new Altos.
Yeah, Sumit, this car has more than 100 changes. If I count that, it will take your all air time. But broadly speaking, it's an all-new exterior. We introduced a wavefront design. Then the pedal-shaped front lamps. So it's all new. Inside, if you go, it's a two-tone interiors. This car is very interesting that despite reducing the overall size marginally, interior space we have been able to increase. If you come to drivability, we have introduced detent pin technology, drive shaft and DSA. Because of that, the driving is extremely comfortable. Kitna deti hai? Yes, fuel efficiency improved a lot. This car is the most fuel efficient car in its category. 22.7 kilometers to a liter in gasoline and 30.6 kilometers to a kg in CNG. So changes. Many changes. So we have invested around 471 crore rupees in this, along with our vendors, to develop this car.
You sell approximately 25 to 30,000 units of Alto every month. So coming festival season, how much increase you are seeing in the Alto sales in festival season and thereafter?
Yeah, you are right. This car is the largest selling car in India, and we are confident will continue to be so. Now, as far as exact number, I think it's very difficult to do that because the way Indian market has been performing last few months, it's very difficult to hazard a guess. But we are very confident we'll do well.
Will it be able to stem the fall in sales of petrol cars, which are really falling in India currently?
Okay, one car alone can't change the whole market, but I think this car will show good numbers. So there are more than, I think, 60 or 70 petrol cars in country. All are declining. We can't assume that one car alone will completely change the market, but I think it will definitely improve.
In terms of future products, will we see as Mr. Nakanishi said, in 1 to 2 years, smaller diesel engine cars, and will you now say to a nano competition also, because in the market now nano is selling very well?
No, I think we did not say that we are going to launch a diesel engine in 1 to 2 years. We did not say that. What we said, we would wish that we have it early.
And about the nano competition, will you still look at that?
No, actually, we do not target. We target a customer. We think that out there is a big customer who prefer a car at this price point, loaded with features like this, and who will not like to compromise on many other things. So we are not looking at that level of pricing.
Okay, that's the CEO of Maruti Suzuki, Mayank Parikh, in conversation with ET Now, exclusive one at that, at the launch of the new Alto. In fact, the stock is holding up quite smartly in trade. A good 2% bump up is what you're seeing in Maruti in an otherwise quiet market, which is now beginning to drift into the red.